Anil Agarwal of Vedanta Group joins us now to understand that the decline in crude, what it means for the world, for Vedanta, and for oil producers and for also oil consumers. Mr. Agarwal, there is a technical reason why oil sold off yesterday, but the bottom line is that oil prices have collapsed. How will this change the way Vedanta will do business, oil companies will do business? Because the challenge now is that oil companies will struggle to repay their debt, and there's a risk of some of them going bankrupt.
Yeah, this is unprecedented, and what has happened. But fantastic position in India. Can't be better. Is a great opportunity for India, because India is one of the largest importer of oil. At the same time, for Vedanta or India, the best thing is to invest in the oil, because today India only produce 10% of the oil what they need, and they should produce at least 50% of the oil. We have a fantastic oil reserve, and today's technology focus. How can we at least 50% oil and gas we can produce in India? World over will move to India to produce. And phenomenal anchorage we have in India. And as far as Vedanta is concerned, we are producing 200,000 barrel, and our net cost is $6 barrel what we produce. We have a lot of cess and other duty. Government is considering. They are very focused. They are very supportive. How they can, including the ONGC, how they can slash the cess and the duty, so we can be at par, and we can make some profit. So two things. One is that Vedanta, $6, we are definitely making little profit, but very important going forward to have a support from the government to produce more oil in the country. We are the second largest producer of gas, which we feel very comfortable, and we are looking forward to produce more. As far as the world is concerned, it's amazing how Saudis and other people were looking forward and so tight to supply to India. Today, India is a very strong position to import this oil.
Okay. Now, not India, but if I look at the story from the side of oil producers, there are oil producing nations which get nearly 25 to 50% of their GDP from oil. That's going to collapse. So are we looking at a serious country risk in some of the oil by some of the oil countries? Some of the oil producing countries also are big investors in global assets via the sovereign funds. So do you fear that the crack or the meltdown or the bloodbath in oil is going to have a huge imbalance in the global economy, both in terms of how money would be pulled out and how wealth is going to migrate and how wealth destruction will start?
Yeah, some of the Latin American countries have dependent on the oil, and one is that the interest rate is zero. The supply of money is tremendous. We need energy. If you look at the energy, is very important. It is maybe very temporary phenomena what has happened. I agree with you. There'll be huge pressure on this company. The market valuation will come down. They will have a problem. But my feeling is that in the long run, because of the energy requirement from India and China, some of the correction will come. But I'm with you. Some of the country who's completely dependent on the oil will be in trouble. But for India, it is a very important time to develop the energy, whether it's a coal, whether it's a gas, whether it's a oil. And I'm looking forward $100 billion investment by India or the government to build the asset at this point of time.
Okay. Let me ask a question on behalf of your shareholders. Given that your stock has come down and the bond spreads have increased, generally there is an anxiety among shareholders that what will happen to your liquidity, what will happen to your debt repayment. Why don't you use this forum to clear the air that what kind of cash position you are in, and your equity shareholders and bond shareholders should not be worried?
Yeah, if you look at our position, we have $14 billion revenue completed this year, which we completed on March. We had $3.2 billion profit. We have a $1.2 billion cash. So there is not to worry about repayment or the anything. We are very comfortable, most diversified company. We are in a business of oil and gas, we are in a business of aluminum, we are in a business of zinc, silver, steel, iron ore. So all this put together, we are very well balanced and very comfortable. The total debt in the company, including the parents, is $10 billion net, which is in comparison to any of the company against what we have. We are very comfortable position. I can assure all my shareholder and the bondholder, Vedanta has never 25 years, never ever defaulted any of their payment. So there is no question that we will default any point of time. We are the largest shareholder. We will hold on. If you look at, we are 1.5% GDP of the country. We pay highest tax in the country, and phenomenal position as far as growth is concerned. So not to worry as far as the shareholder and the bondholder is concerned, that we will not be able to pay. We will pay everything, whatever been borrowed, and the borrowed amount is very comfortable seeing our balance sheet.
But your cash flows, Mr. Agarwal, will come down. And if your cash flows are coming down, either you will have to cut your cost, or you will have to bring down your cost. You'll have to automate a lot of processes. So what are the tough decisions where you made up your mind that you will be forced to take? Under normal circumstances, you would have ignored them. But what are the cost control measures? What are the cost cutting initiatives you will be forced to do now because of this, because of decline in commodity prices, and because there could be a cash flow issue?
No, beautiful question. I can tell you, we have really gone through each and every cost. We believe that we will be able to reduce costs by 20 to 25%. The same market has gone. We are very careful what capex we are going to invest. As far as the cash flow is concerned, as I said, we have a good cash flow. We are going step by step. This coronavirus, we have shut down for few days. We are starting all our plant with all the precaution, and we believe that we will come to whatever we produce. India need those commodities. So we have a fantastic position where we have whatever we produce, we sell in India. So to answer your question, we have reduced our cost for about 20-25%. We have bring the efficiency, increased the efficiency. Technology has come in, so very, very focus and tighten the belt to run our company day to day.
When you say that you would be examining your capex carefully, would you like to throw more light on that? Because you are India's world's largest zinc producer. I can say the same for silver, and I can also say the same in many categories where you're either number 1, number 2, or number 3 in the world. Where are you likely to cut your capex?
We are redesigning everything. At the moment, we need to put a capex. We were producing about 230,000 barrel of oil. We were going to almost 500,000 barrel of oil. We are looking how shall we hold on to that? How do we look at everything? We are examining what has happened in last few days, and we will be very, very careful. Unless something we get a capital return in 3 years' time, we will not do it. We were increasing our investment of about $1 billion in zinc because we are going up to 2 million ton, and that we will go ahead. Apart from that, some balancing capex will do, but we are on top of it. We are not borrowing any money from the market. for any of our expansion. We'll do it everything internally. See what has happened. If you see how we manage Vedanta, so beautifully we manage even the lockdown time, how we have make sure that when we start, we restart well. At the same time, we have taken care of community. We are the people who taken. We are very concerned on the migrant labor. We have taken care of the migrant labor. So every respect, we are balancing ourselves. I'm 100% sure that the way we are doing step by step, and especially in India, our cost will be matched with the world. Our capex will be matched with the world. At the same time, we'll be very friendly with the Indian situation, whereby we are with the government for everything, whether support government for any kind of donation, any kind of support. We are all our 17 plant everywhere. We make sure our community is comfortable. So as far as the company is concerned, very good shape. All our people, we have about 100,000 people. We made a plan that all 100,000 people should do something for the community, and you will see everybody taking care of at least 3 or 4 meal every day for each family. That is one side. The other side is we are starting our plant. Very unfortunate that we have to stop the plant, but we all are starting our plant. Definitely that will carry on some of the pressure on us in terms of our profitability, but very short term. I'm looking still this quarter to be not bad. It will do well even in this quarter.
In this partial lockdown phase, how much of your immigrant labor has come back, and how much of your plant activity has got normalized?
I would say 70-75% our plants are normalized. Migrant labor is my personal feeling because I come from that part and I exactly know how they feel. The small children need the milk, people need 2 square meal. Without our labor from Bihar, UP, even the Punjab crop is ready, they need labor. All the construction work which is starting, they need labor. Entire India need labor, and that what has happened today, they all are really hand to mouth because they were on the daily basis. So government has also supported. Government is also, I'm looking forward some money to be given to them. Vedanta is doing as much as we can do to this migrant labor. We also making sure all our labor who is to work with us, we should take care of them.
Right. Mr. Agarwal, over the years I've interacted with you, I've always secretly admired your ability to take risk. You've not shied away from acquisitions. You managed to grow your Vedanta group with acquisitions. While what appears today is like a carnage for oil companies, oil producing nations, it's not your stock has fallen. Everything in oil has fallen. Are you in a mood to take risk all out and acquire some assets which may be available cheap, or you are not in a mood to acquire aggressively right now? Because, a couple of years ago, you went all out, you raised debt, you acquired assets. Are you thinking like this right now?
For me, very focused. India is vulnerable position, and government is very conscious that we should produce our own energy. And I'm on the forefront. I'm the only oil producer in the country. For me, it's a great opportunity because I can get best of technology from the outside, and because I have a fantastic reservoir. We are the only people who has the sweet crude, sulfur-free crude, and it is a great advantage. In India, we have 21 refinery, and all of them importing about 80-85% of the oil. So I'm in that position. I'm very excited at this point of time that there is definitely a pressure on the price, but we will be able to manage. Government, you will see, government will reduce the cess for us and ONGC. I have also said government, make us free. If you allow us self-certification, today getting all the approvals, take almost 17, 18 months. If they allow us self-certification, we can accelerate. And this will be a real model for other companies to come to India and make an investment. So it is a one-way blessing in disguise, whereby there is an opportunity where people will see that this is the market, huge, one of the largest market of the world. There is a 10% increase in the consumption, oil you need, gas you need. So let's go and invest. What they are looking, a government, and this government is of doing business is tremendous. Most of the things are coming as a deemed clearance. I never seen bureaucracy working like this. So it's a great advantage for us to make sure that we build the asset. That is my focus. Definitely, I'm not looking at this point of time acquiring anything apart from what we have in our hand.
Having said that, Mr. Agarwal, I'm not putting words in your mouth, but I'm curious to understand your thoughts on the fact that we've not got a comprehensive fiscal package from the government. I don't know why.
See, the government has given a lot of physical package, but if you see, most of the money has gone to the public sector company. And this is a tremendous. I always said that government has no business to be in a business, because all the time there will be a discrimination. If that is very important. Government is doing, Reserve Bank is doing as much as possible. Couple of lakh crores rupees has come, but most of the money is being attracted by the public sector for some reason. If you see, yesterday, the good thing has happened that they've given the largest coal mine to Nalco. So this is something. If they can give it to us also, that kind of mine, we will be very different position. But still, looking at the situation, this mine also, they won't be able to consume all the coal. We are next door. Probably we will take some of their coal to run our aluminum plant. Government should come out as much as, because whole world, the way I live in UK, they have given amazing package to everybody. 6 months rent, 6 months salary, all the bond which is due to the British company. And if you go and apply them, they will take care of that. So those kind of situation is there. Probably India does not have that kind of resources. And let's see, government is doing whatever they can do.
Right. Okay. So let me invite closing comments from you, Mr. Agarwal. And I have to ask you about BPCL, because you've gone on record in December when you came for our event and you said, look, I'm interested in BPCL if it comes at a right price. Oil prices have collapsed, but the demand for fuel and retailing will not collapse. Are you interested in BPCL at the right price?
I will only do due diligence. Due diligence is very important. Number two, the government has done the minimum balance sheet $10 billion. My balance sheet is only $6.5, $7 billion. So government has to relax the terms so I can be part of it. If they don't relax, I'm out of bidding. So that is one. But definitely, because I'm an upstream, every company who produce the upstream want to go in a downstream. And this will be opportunity. We'll definitely, as and when this comes, we'll apply for it. We will do the due diligence, and if it is helpful to us, if it makes sense, we will make a plan. We will work it out. We'll go to our shareholder. We'll go to our bank and see what can be done. But at this point of time, definitely, I have no idea unless we do the due diligence.
Where do you think this crisis will create opportunity for Indian manufacturing? Because now suddenly interest rates are low, corporate tax rates are also low, logistics will shift, people will reduce their dependence on China. But what will it take for us to get that part of global manufacturing back to India?
This government will do everything possible. They understand, as I said about the oil reform, trust, trust, and trust. Give them a benefit of doubt. And whenever they have entrusted, the Indian entrepreneur has done phenomenal. So what a opportunity between the war between China and US. We are very neutral. From the America, from the China, it is the best opportunity, whether it's electronic, whether it's a software, medicine, anything you talk about glass. I think India is a very, very good position to attract this investment, and government is ready. Government is ready. We all are ready, and we will take the opportunity.
Appreciate your time. Stay safe and thank you for your valuable inputs. Well, meanwhile,